All right, so I believe most traders, if not all, struggle with understanding or learning the concept of market structure, trying to determine which way to actually take their entries, whether they are long positions or short positions. The key to it all is really understanding which way is the market moving. Okay, and when I say this, I mean you must be able to look from a broader perspective to understand which way to day trade. Now, today I'm going to show you just using a higher base chart. You need to look from use a higher base time frame or tick based chart volume. I trade using range charts. And the reason why I do, they're cleaner to the eye to me. The candles are more, equivalent to one another in size. I don't have to worry about all the wicking or lots of large and small different wicks and trying to determine which way I needed to trade. If the market has broken structure to the upside, to the downside. The flow of range charts seem to be very consistent for me, and just looking at them with the naked eye, I can follow structure fairly easy. So in this video here, let's take a look at, say, for example, the NASDAQ. And it doesn't matter which future market you actually are interested or instrument you're interested in trading. You just really need to, number one, I'm telling you, if you can master this one thing, then that's going to put you 90% or more of the way there. Most traders, and not just that, if you really want to be in the top 5% of all traders out there and kind of work your way from a beginner to more of a professional style trader, you have to understand the flow of the market, and you can really understand order flow by looking at the actual charts and understanding, structure. Okay, so the way I like to tell traders, especially if you're a beginner, is if you're having a hard time, understanding which way should I trade, look at a higher base chart. Okay, I'm using a 120 range chart, and that pretty much lets me know, is the market bullish to the upside or is it bearish to the downside, constantly breaking structure? And if we are making higher highs and higher lows or lower lows and lower highs. Now, if we are trending to the upside, the only way I want to be really looking to trade in is long, okay? And that is pullbacks to key areas of demand. Inverse of that, if we're making lower lows and lower highs to the downside and the market is just selling off, then I'm only interested in looking for pullbacks to key areas of high probability supply zones, okay? Aggressive areas where the market is selling off at. So what you need to do, guys, from a top-down step or top-down approach analysis is start with the higher base chart to get the direction correct first before using any particular strategy at all. So if we look back at this, let's say the last several days, we'll go back to like April the 9th here, okay? We can see the market shifting from a downward direction to an upward direction by making highs, higher lows, highs, higher lows. Just keep doing it, up and down, up and down, up and down. And as long as it's doing that and breaking structure higher, and taking out the most recent high, then look for a pullback to a key area of, demand. All right, made a new high here, pulled back, broke structure, came back. It tested an area of demand down here, it pushed higher. So as long as it's doing that, took out this high here, pull back, took out this high here, broke structure, pull back, took out this high here, broke structure, pull back. It does make a break below this low right here. Now this would be a more so like a major area structure right here as moving to the downside right here. It did break below that area there. So we are at this point, we moved from a bullish to a bearish standpoint right here by making lower lows and lower highs, breaking structure lower and taking out like a major low right here. So when it did that, we should be looking for pullbacks to go short, but then the market can change again and start pushing higher. So the moment it makes a high, higher low and starts breaking structure to the upside, taking out, structure to the left. So a full-on trend reversal, like I talk about in many videos, will be where the market is making like lower lows and lower highs to the downside, pulling back like this right here. And then it starts to make a high, its first high, a pullback, a higher low, but not taking out the most recent low, and then breaking structure above, say, for example, like as it pushed higher right here, it made a high, higher low, not taking out the low, like I just showed you right here, pushes up, takes out this high here, but we want to see it take out some structural high right here too. So it took out an area of structure here. So now we got a reversal here happening in the market. Then it pushes up, pulls back, takes out more structure, but we got a major high resting right here, and it takes out that major high at 19,110. Still breaking structure higher, high, higher low, breaking more structure to the upside before we get a shift going to the downside. So all I'm really saying is follow the ebbs and flow of the market and look for structural breaks to the upside and look for pullbacks, so key areas of demand where there are areas of aggressive buying. All right. For example, like we were pushing to the upside right here. Let me see if the market pulled back to what key areas. Let's see, broke structure here, came back. This would be low, actually, yeah, low probability right there. Broke structure here, came back. All right, this is a high probability zone right here because it broke a major higher here, but we were already shifting to the downside, breaking structure lower. But this is an area of demand right here, okay? Market came back. Let's see, right here. Here's a push up, pull back, okay? As you can see it pushing lower. It pushed to the upside. This is a major structure break to the upside. Pushed up, pulled back, made a new high, came back right here, broke a structure high here. That's a major structure high. Pulled back, pushed up, okay? And then when it pulled back, it tapped into this area of, I'm going to show you right quick, demand right here. All right, remember what I said. As long as we're breaking structure to the upside, making new highs, this is an area of demand. It rejects it. It pushes back to the upside right there. And what does it do? Tap right into an area of supply where it rejected from to push lower. So now we're making lows, lower highs, and lower lows, but we haven't taken out any structure here to the downside quite yet. All right, yeah, we got the first low, the first pullback on a lower high. Okay, we didn't break the most recent high. Comes down, makes a new low, but we're looking for it to take out a low over here to the left hand side, and that it does that when it comes down and breaks structure, pushes low, makes a low, lower high, and pushing lower right here. First time I made a first low, lower high, we didn't take out any structure over here, but we did break structure right here. But I want to see structure taken out here, first attempt when it makes a low, lower high, then pushing lower, and then taking out something to the left as well. When it does that, takes out the first low, and then takes out a low, the first low to the left, then we got a reversal happening here from a bullish back to a bearish market. Low, lower high, pushing lower here to the downside, and the market just kind of follows suit as we're making these low, lower highs. Low, lower high, low. That's a major structure break right here, okay? Coming to the downside right below this area here. Pulls back, another structure break below this area here, and we just kept doing that. The market's been selling off over the last several days. We've been selling pretty heavy. It's actually been selling off, if you take a look at like a daily chart, since December, like the 15th or 16th of last year, 2024 of last year. So that'll tell you a lot right there. The market's been very volatile the last, I would say, a couple of weeks, but this year, if you understand, most people say trade what you see. You can still make money in these markets. What I'm trying to say, if you have money tied up probably in investments, 401k, things of that nature. I'm sure there's probably been a nice dip in your funds because we actually blew through the lows of the annual 1 year low so far, breaking through lows of both April and May. So yeah, it's been quite a show, really, with the new office and things that are taking place with the administration and the changes they're making. So we'll see what happens, over the next few months, especially into we're about to get into. We're already in second quarter of this year, so maybe third or fourth quarter rounding out to see what happens. But anyways, the market from this standpoint here, there's going to be times where you see the market, like right here, making lower lows and lower highs, but then it shifts again back to the upside. Again, anytime the market is moving into one direction, you have a bias and you're saying, okay, I'm only looking for shorts as long as it's making and breaking structure to the downside where it's making lower lows and lower highs, then that's the way you want to do it. You should be looking from that standpoint to take trades from your lower base chart, moving in the same direction as your higher base chart. So again, let me say this. As long as your chart is showing you that the market is bearish, only be looking to trade on your lower time frame charts. If you're using the strategy in which I talk about, using multi-chart confluence, you want to be trading in the direction of what's going on from a broader picture. Okay. Again, as long as we're making lower lows and lower highs, be looking for pullbacks to key areas of supply. If you trade supply and demand zones, so if the market shifts, say for example, we made a low right here, right? Pushed up, made a high, higher low, broke structure. So we broke an area structure here. We broke structure here to the left hand. So we got a little reversal going on right here, back to the upside as it's pushing higher. Again, this is on my higher base chart, in which I always start with to give me or help me to determine a directional bias in the market. Then we made a high up here. This is a nice pullback didn't break this low here. So now we're in between a major low and a major high right here, okay? If it breaks either way, this is what we tell beginner traders: wait for the market to tell you, especially when we're kind of like in the middle of something. We're in between the middle of a leg. How can we identify that? Well, we have a major low here. Okay, the market just broke structure to the upside. The shift has changed from bearish to bullish, and we're now in between something. What is that something? A major low and a major high. It pulls back right here. Wait for it to take out a major high or the major low. Right now it pulled back. We're in between, maybe the 50%, a little bit lower than that, 76.4, 61.8%. What am I talking there? Fibonacci numbers, but I'm not, or Fib retracement numbers. I'm not trading them. I'm just telling you that sometimes, people do trade that as a strategy, but I don't. I do talk about it in reference to where the, a move has started from as it is pulling back or retracing to look for an opportunity to go long. Like right here, the market made a high, higher low, pushed higher here. We broke structure above this area here, this little swing, and we also broke a structure to the left. Trend reversal here. It pulls all the way back, and I'll show you if I was to pull, just say for example, a fib. All right, look. I always talk about trading the pullback on the based on the extremity of a leg. Right here is a 76.4% area. It pulls right back to this demand zone, resting right here, aggressive buying, breaking structure here, pulling back and takes off to the upside. All right. So I talk about that, wherever when a leg is formed and we shift direction from say this case here, bearish to bullish, then look for it to pull back to a key area that you can try to take a trade from. Okay. The market then pushes up. So what I just said a moment ago, wait for it to either break and take out an area of major structure, a major high or a major low. This case here pushes higher, takes out a major high right here. Look for a pullback to a key area of supply. It pulled back and actually, let's see, it broke structure, came back right here. It pulled back to this area of demand right here, but I'm not sure, this could have been around some news time, kind of looking at the market right here. But yeah, so once it breaks through and takes out a major area of structure, look for a pullback to a key area of demand. Now, this is a leg here to the upside here. They could want to come down and test lower areas here. This is a not minor, but this is a tested area of structure right here, where that aided in taking out this area of structure above here, this major area. But anyways, the market then pushed higher to the upside. So all I'm saying is look for areas where the market is pulling back to key areas of supply or demand. In this case here, because we shifted from a downward direction, my bias now will be, okay, we're making highs and higher lows, looking for pullbacks to go long. Okay, now I'm in a new high right here. This is the most, this is the lowest low sitting down here, which is a major low. You have a major low resting right here, okay, right here, and right here. Okay, why? Look, we're forming structure as we're making higher highs and higher lows, right? Now, right here, we pulled back, we broke structure here, creating some structure and broke an area of structure or a high right here. Did the same thing, making higher highs and higher lows, came back to the downside right here, broke above, took out a major high right here, and now creating a major low right here. It did the same thing. Well, up here, let's see what it did. No, it didn't do that up here, but before it shifted right here, it made a low. Well, it made these highs right here. Then it comes down, makes a low, lower high. Well, not say lower high because we broke above this area here. A higher low. Then it comes up, makes a high, weakened above this area here before it makes a low, a higher low. The first higher low right here. Okay. I'm sorry, lower high, not higher low. Lower high right here, and then we start to move to a downward direction right here. I'm just telling you guys to follow the flow, or showing you to follow the flow of the market, where we shift from bearish back to bullish. Comes down, it takes out a major low right here. Okay, we got another major low here, another major low here. So these are key areas of structure. All right, if you have a hard time identifying key areas of structure, just look to see, okay, if it's pivoting and making higher highs and higher lows, and then it starts to make lows and lower highs and lower lows, taking out structure as it's swinging downward, but also taking out structure to the left. Anytime it starts to take out structure to the left and it's breaking structure as it's coming lower, then that's going to be a indication that the market is creating some type of major structure. Okay, then when it turns back around, let's say it makes this low here after taking out some structure here and creating lower lows and lower highs to the downside. Okay, and then it comes back and takes out a major high. then that's a major structure point here and a major structure point right there. So look for some formation of structure to be formed, and that's going to give you a key area or key idea of what's major versus what's minor. This is major because we got structure formed here. Came back down, took out some more structure on the way down, coming down, low, lower, high, pushing lower, broken above this area here. So you can look for something to happen when it comes down and breaks below this this area structure right here. For example, like when it came down and broke that that structure right here, that low there, it pulled back to a key area of supply resting right here, aggressive selling. All right, see it coming to the downside, aggressive selling right there, taps into the zone right here. Let's grab it right quick, right here. That's a supply zone, and it is a high probability zone. Reacts off of it, rejects, boom, comes to the downside right there. All right, so now we're starting to make these lower lows and lower highs to the downside. Low, lower high, not breaking above, taking out these highs up here. If it did, then this will be a major high being taken out right here. So this is a major high. Again, look for the major highs and lows to be taken out. What creates them? Where the market is creating a beautiful area of structure. In this case here, it's coming down, lows, lower highs, lows, lower highs. Coming down is as it's breaking structure, making swings coming down, it's taking out structure to the left as well. So when it shifts back around, pushed back up to the upside, it takes out this high right here, where this red line is. That's a major high being broken. Right here, this is a low. It comes up, all right? It's creating an area of a structure right here. Why? Highs, higher lows, coming back to the upside, taking out structure to the left as well. When it comes back down, okay, it took out an area of structure right here, which is a major low. But then as it's making higher highs and higher lows back to the upside, you got a major high right here, major high resting right there. So if it's taking, especially if you're taking like two major highs going back to the upside, look, when it comes down, it's going to find some point in which it's going to react at and reject off of a demand zone right here. Look at this. Okay, look, demand zone right there, push right back up to the upside, going back up. All right, and as you can see, it reacts off that demand zone there and pushes, like I said, straight to the upside. Why? This was as we made this low here, it started turning and shifting back because now we're back bearish. It starts to make bullish directional sentiment back to the upside here as it's moving higher. It's taking out structure here, took out two major highs. It's going to search for areas where there's aggressive buying at or demand at. There was another one right here. I can eyeball this stuff pretty quick, guys. I've been doing this for a period of time. Right here as well. Okay, it reacts off this one, and this one coming down as it's now coming to the downside right here. It reacts off of them. Okay, these are because it broke major structure above these highs right here. This one here and this one right there. So just following the direction of market structure, that's going to be, the best piece of advice that I can give anyone, who's looking to trade the future markets. It doesn't matter what contract or instrument that you're actually doing it, but you've got to use your higher base chart or higher time frame charts to start off with to help you determine which way to trade. Okay, this is my simple course of looking at the markets over the last several days. This was Friday's trading session right here. As you can see, we broke them highs right there. Now we're in between a major low right here, okay, and a major high, and now the market is we got a major high and a major low right here. So we're moving sideways right here, then we push back up, broke this major high again, break a structure above, major high, okay, and then we look for a pullback to a key area. That's why I had this marked right here, because if I squeeze it together, you can see where the market broke above this high right there as it pushed to the upside off of this swing right here. So this was a demand area right here. It never came back to it so far. But anyways, if it does, I have to be mindful because we can start breaking structure. Like it looks like we made a high right here, a low right here, and making a lower high right here. So we can now start to come to the downside. We've already broken above this low right here. Got the first low breaking above this low here, making a lower high. So we come down. Now the market's going to shift from bearish back to bullish. Bullish back to bearish. And so this opportunity right here will be a counter trend setup going back long if I choose to take that trade. And nothing wrong with counter trend trading. It's just that if you do so, look for something larger like a major structure area being taken out. Okay, but that's all I have. I want to show you guys today. We got another trading week coming up this week, Monday through Thursday, maybe Friday. Friday may be an early close. I believe it's, we've got a holiday there, moving into the holiday weekend. But outside of that, be very careful about what's going on. in the economic news this week, just as well as all the crazy volatility that we've been having. So trade safe. Now, anyone out there who's interested in joining the Elite Channel membership, that's where you get all the trade breakdowns. You know, where I post my trades over in the Discord. The Discord is free. Both links are down in the description portion of the video. The first one's the Discord. The second one is the Elite Channel supporter link. If you want to become a member, it's for the private community to where you can gain access to all the trade breakdowns. So I'll walk you through these setups, talking about profit target, talking about stop loss, talking about structure. These are breakdowns of trades that I posted over on our Discord, and so that everybody can understand why I took the trades, okay? But it helps you just as well to be able to clearly look for these, setups on your charts. So please do yourself the biggest favor and back test and forward test things just as well. I can't make any guarantees because your perception and how you see the market could be definitely different than mine, but that's why I'm trying to paint this picture and make so much relative video content to try to help you out. Again, the link to become an Elite member is down in the description portion of the video. The second link, you'll see it. Click on it. Make sure to choose the second tier for $6.99. That's like 24 or 25 cents on the day. Very inexpensive. That's for a month, okay? You can roll up month to month, $6.99 a month, because there's tons of video content there. You also get the video playlist and a great video that I cover surrounding market structure for anyone struggling with that. But outside of that, if you have not already clicked that subscribe button, please take the time to go ahead and sub. By clicking on the subscribe button, make sure to turn on your post notifications so that you do not miss any other uploaded content. And last but not least, before you click off the video today, please make sure to click that thumbs up button, that like button, to show me that you found some value in today's video content. And go back and watch the videos. People always ask me, where do I start from? Start from this video right here and go backwards, okay? Because that's going to be the most relevant or most newest content that's up to date, that's really going to be stressing, the strategy and the specific topics surrounding the way that I actually personally trade. Okay. Outside of that, have a great rest of your weekend. See everyone in the next video.